Hey there, Vinny from Project Frugal, sick as a dog, but the show must go on. Episode 82 of Road to 100k. Oh, feeling pretty bad, but we gotta carry on regardless. Have we gone up, or has it been a miserable couple of weeks? Let's find out. You really know things are bad when you've got man flu. Only men could understand this. Men, you can sympathise. I understand your pain. I feel it too. That's the way it goes. Sometimes you get sick, and sometimes you're right as rain. We'll carry on. Into the portfolio, here we go. 76,740.07. But that's not all, because if we click on this again, we've also got $3,666.01 into the shares he saved. Let's go and have a look at the wallet, see what's happened. If we scroll down a little bit, back to the last couple of weeks, so we're looking pretty much at the start of the month. On the 2nd, we had $132.99, which I think we covered in the last episode of Road to 100k. Put in another $1,000. And then what else have we got there? Transferred that money over to the wallet. Geneva Finance actually sold up and got delisted off the New Zealand Stock Exchange, so we got paid out for that, which is a bit of a loss there because I think we'd put in maybe about $950 into that, and selling it $715 odd. Might have made a little bit of dividends off that, but nothing too major. But there's nothing we can do about that. They've sold up, that's it, we got the money back, or as much as we're going to get back. That's the way it goes. And then, putting that money back into the shares he save again, boosting that up. Nothing more we can do with it, really. Another wallet top-up a couple of days ago, another $1,000, and directly transferring that into the shares he save again. Gives us a balance of $80,406.08, but we're not going off that number, and the reason is, we have said this before, if we go into the investments, we are not counting the Barramundi Limited warrants, $47.74. We are also not counting the Kingfish Limited warrants, 42 cents, and also the Marlin Global Limited warrants, $20.14. These three funds are all run by Fisher Funds. We're not counting them. Maybe I will at some stage, but at this stage, we're not counting them. So we're just going to sort of write those off to a sad one. They're just sitting there in the background. They are worth something. We're going to do nothing with them. We're not going to redeem the warrants. We're not going to sell them. We're not going to buy them. We're not going to... Whatever else you can do with warrants, I still don't fully understand them. We'll just go with ignorance is bliss. Moving on to the application. Well, what a great day today. $653.92. In fact, the market has been going on a bull run in the last couple of weeks. It has been fantastic. In the last episode, we were down well over $4,000. This time, we are down, what are we down? Just over $1,600. So we've recovered pretty much $2,500 within 2 weeks, on paper of course. A fantastic result. And if we have a look at some of the action today, most of these bits there on the daily change, it's all in green. Colonial Motor Company has gone down. That seems to be on a bit of a downward spiral. We're not going to be selling it regardless. Meridian Energy has gone down a bit. Property for Industry down a bit. Somerset down, and Westpac down a little bit. The Warehouse Group up 4%, and some of these others have made some fantastic gains. Kathmandu up 6.5%. Pretty impressive. So a great gain for the day, $653.92. Fantastic. Let's go and have a look at the dividends. And as you can see, nothing much will have changed since last time because we did include this in the last episode of Road to 100k, $132.99. Well, I'm pretty sure we did. I'm not going to go and actually double check that. However, $1,662.67 with another $216.90 to come back into this portfolio this month, and we've got another 12 or 13 days to go in the month of July. So that will be pretty good bonus money there, and that'll push that July dividend amount up to, what have we got there, roughly $350 for July, which will be the best month ever for July, which is great. Looking at the share allocation, not much has changed since we haven't been buying anything by the looks of things, because now the wallet is up to $3,666.01. In the next couple of weeks, we'll have another $1,000 to put into this portfolio. There'll be some dividends as well, but we're not quite going to get up to the $4,000 mark. However, we will be buying $4,000 worth of shares on the $7 monthly Sharesies plan in the next couple of weeks. And whatever's left over is left over back into the Sharesies save, into the Sharesies wallet. Well, into the wallet and then into the Sharesies save, earning 4.6%, which is not much. Well, kind of almost covers inflation now. So that is kind of, break even really. And having a look at the NZX50 charts, you can see here the week has gone up, the fortnight has climbed dramatically up. Well, look at the month. You can see here from the 8th, everything started happening on the 8th of July. What are we into? That's the last 10 days worth of growth. The last 10 days of a bull run on the market. And, well, you can even see it here. Look at that. It's just gone boom. And the same with here. It's just gone boom. Reaching an all-time high by the looks of things, or at least a high in the last year, that's for sure. And the big question is, why has this occurred? Well, there's a couple of reasons. And the first of those reasons is interest rates have finally come down. A couple of main players in the market, I think it's Westpac and ANZ, have actually dropped their home loan rates by a little bit, might be 0.25%, something like that. But it is making a difference. It has made an impact. The Reserve Bank has made another call on dropping the official cash rate, and they've decided not to do it at this stage. However, it's looking more and more likely that they will be dropping it in the near future. What does this actually mean? Pretty much it means households are going to basically have more money. And the fact that inflation has steadied at 3.3%, it's on the way down, means prices aren't going to carry on ballooning as much as they have in the last 3 years at least anyway, which gives people certainty. So it means they can plan their future a little bit better, their financial future a little bit better. And with interest rates dropping, essentially it means people will be, especially those with mortgages, will be paying less out mortgages to the banks, less out interest. They'll have more disposable income, which can then be reinvested into the economy, boosting jobs. The cycle continues. Everyone's an investing guru when the market's going up, no doubt about it, but everyone's a poor investor when the market's going down and they're losing money. So what do? You don't worry about it. You just invest regardless, because at some stage, like we've seen in the last couple of weeks, the market's just going to go whoompa, straight up. Let's go and check out this ad from 1986, just to show you how things were back in the day.
High interest, short terms, earn 16% from 90 days with countrywide term deposits.
Well, 16% interest at the bank for some sort of term deposit, that's incredible. Obviously, you're not going to get that at this point in time, but do you realise how much mortgage interest rates were back then? 18, 19, 20%. Horrendous. So while people might argue that people back in the day, you had it so sweet, houses were cheap and all the rest of it, well, houses weren't cheap in comparison to wages. Maybe the ratio of house price to income was lower than it is now, but consumer goods were far more expensive, such as all sorts of things, electronics, cars, you name it. They were way more expensive than they are now in terms of value for money and all the rest of it. So it's apples with oranges, oranges with apples, or whatever the saying is. You get the drift. And finally, let's go and check out this other ad. This is also from 1986, and this is about getting your taxes done. I've just done mine, did it myself, saved a lot of money, didn't pay anyone. Yes, it took a while, but I got it done. Let's check this out.
Bob thinks he's quite capable of completing his own tax return. John leaves it up to H&R Block, the tax specialists. The difference is simple. While Bob is still trying to fill in the forms, John is relaxing.
Well, what is wrong with this, you ask? There's a couple of things. My PC, I've called it Bob. This is long before I ever seen this ad, that's for sure. Denise's PC is called John. So go figure. Got the same characters, the same PC names? Whoa. But wait, there's more. Now look at this guy's sandals. That is truly a crime. He's playing soccer with his son, wearing sandals. Oh, the horror of it all. Clearly the man has no shame whatsoever. So what an absolutely fantastic time we've had in the last couple of weeks. Besides getting sick with the flu, the man flu, whatever you want to call it. It's not ideal, but the market is certainly making me feel a lot better than I would have been otherwise. And that's about all the time we've got for in this one. Hopefully your portfolio is doing just as good as ours is in the last couple of weeks. you'd imagine it would be, assuming you've got some money invested in the first place. Thanks for sticking around. Don't forget to like, subscribe, leave a comment down below. We'll catch you in the next one. Hopefully this flu will be gone. See you later.